105.7 Line FM. Gwen Stefani is there. They call me Morning Dave. It's 8:40 here, 20 before 9. Hey, this is the time of the morning we always check in to see what's happening with your retirement fund on Wall Street. And dang, I wasn't watching much yesterday. Things weren't moving fast, but it was always downhill the whole darn day, so we ended up with kind of a crummy day. Let's see if we can't sort out the data. Downtown Sebring, we go to the offices of Statler Financial Services, where Phillip Statler is standing by. Holy crud, Phillip, 525 points down on the Dow yesterday, and there weren't any big moves. It was just a general slide all darn day long, wasn't it?
Yeah, it was pretty ugly yesterday. And you know, you asked me before we went on the air, why? What caused it? I mean, we saw Johnson & Johnson have some good news yesterday, but here's the deal, that there was a second stimulus from a couple articles I read baked in to this market. And traders now don't believe that Congress can get their act together and pass something, one, before the election, and two, get something done before the end of the year that's going to be meaningful and help the economy out. So we continue to digress this morning.
I'm afraid of that. Yeah, the Ginsburg replacement is pretty much occupying 100% of Congress, so there's no doubt whatsoever that the stimulus is on the back burner, which basically, like we were saying before we went on the air, confirmed to traders that we've got a herd full of idiots up in Washington and Congress. They're going to do nothing for the economy for at least the next 6 weeks, and that pretty much puts stinking thinking on the front burner for investors, doesn't it?
Yeah, it does, you know, because basically Wall Street figured by now we'd have another stimulus check going out to people. You know, if you go with, you know, Mark Cuban, you know, and his thing, he thinks that, you know, households should be getting $1,000 every 2 weeks for the government for the next 2 months until the end of the year, basically. I found that kind of interesting.
Yeah, and even the administration, who's, you know, been somewhat reticent about the need for a whole pile more direct-to-consumer payments. Mnuchin was telling Congress the other day, before this whole Ginsburg replacement thing blew up in everybody's face, you know, hey, just do something. We'll take almost anything. I mean, you know, we're talking about both sides willing to move, but neither side wants to actually make the first move.
Yeah, you know, Dave, it's really frustrating. I know I'm not the only one that gets frustrated with those guys in Washington, but they really need to put their selves and their self-interest out of the way and take care of the people of this country. And they seem to lack the ability to do that.
You know, you and I have been saying for a long time that probably the second biggest tragedy to the virus hitting this country is the fact that the virus hit the country during an election year, because everything that happened regarding the virus from the get-go all the way through today has been with political calculus being the backdrop. Nobody wants to take the blame for killing the stimulus. Nobody wants to take the heat for having done something that might just cost him 2 points in the election, and the net result is we're getting absolutely jack squat out of Congress. If this were an off year and there wasn't a major election, we'd probably have this handled by, 45 days ago, easily.
Yeah, I agree. The other thing I think is probably putting some pressure on the markets yesterday is we continue to see Europe having issues as seems like a second wave of the virus is hitting over there. And there's really kind of talks of a double dip recession here, which I think that may have traders a little skittish too.
That's true. I mean, the German markets are off by like 6% from just 3 weeks ago. I mean, it is showing over in Europe that their economies are really getting nervous over the second wave of the COVID virus over there.
Yeah, they do. And that's why I'm so confident that people need to have, you know, risk and safety in their portfolio. And unfortunately, when I meet with folks, they typically don't have that.
Yeah, even if you're a rocket scientist and you can read the economies, you can't control a virus, and you never know what's going to hit you in the face. Bringing us up to this morning as far as other current events going on, another thing putting a tamper on the markets is one of the major analysts out there that gets a lot of ink was saying this is the beginning of a second wave of a rolling bear market, which is exactly what the market didn't need to hear this morning, right?
Well, that's right. That's kind of like a second wave of a recession in Europe. That's just not what we want to hear in terms of the market and in terms of the economy. So hopefully he's wrong, but you know what? Nobody has that crystal ball sitting in front of them telling me exactly what's going to happen.
Absolutely. We were making a little fun of Kramer the other day saying, hey, the sell-off's over, start buying again. Well, Kramer was obviously wrong, at least for one day. Let's hope this guy's wrong as well. We do start out the morning with the weekly jobless claims. First-time jobless claims off by a little bit, but still a small miss. 870,000 first-time claims. You put that up against continuing claims. It decreased by 167,000 to 12.58 million continuing jobless claims in the country. Both improvements, but not as big an improvement as the market expected.
Yeah, it's not. And depending upon whose poll you look at, CNBC thinks it should have come in at 850. The guys I watch at street.com, they think it should have been like 836,000. So in either case, it's a miss. And as soon as that hit the news wire, the futures started falling pretty significantly in terms of what the Dow and the S&P and the NASDAQ were trading at.
Yeah, just one of those days in which we needed really good news instead of just on-track type news, and we didn't get it this morning. Before we get into reports, to give you an idea of what the sell-off was like yesterday, the Dow was down 525 points. NASDAQ fell a full 3%, down 330 points. Standard & Poor's was down 79 points. Good heavens, at this rate, the NASDAQ's going to be back under 10,000, let alone flirting with 13 and 14 like it was for a while. How are we doing as far as company reports out this morning to try to buoy us up a little bit?
I wish it was all good news, but it's not all good news. We have Accenture coming out. They're a consulting firm, and they missed by 3 cents a share. Revenue also came in a little bit shy of estimates, and they gave a weaker than expected current quarter forecast. Obviously, because of the COVID-19, their clients are spending less, protecting more, keeping more money in their own pockets. So they're trading down, getting close to 5% this morning.
Yeah, they're towards the top of my big loser list this morning.
Are they?
Yep.
We got Blackberry, but not a name we hear very much anymore. And they're traded on the Toronto Exchange, but they really had a pretty good quarter. They beat estimates by 9 cents a share. Revenue beat expectations. And I guess they've kind of changed gears. They're more now into security and car software, and that demand was strong. CarMax, they had a good quarter. They beat by about 70 cents a share. Revenue was above forecast. I find this interesting. They saw vehicle sales increase by 3.9%, and if you look at their dealerships, same-store dealerships were up 1.2%.
There's got to be another shoe there somewhere because I'm looking at their pre-trade pricing, and it's not looking all that good.
Well, I think that may be a characteristic of what's happening in the market today because their financing profits were up 29%. So I know that they're getting beat up this morning, down a little over 5%. But again, I think that is probably predicated on what's happening in the economic numbers and not necessarily what's happening with that specific stock, because they really did have a good quarter and nothing really was negative in what we saw anywhere. But some good news though, coming out of Darden, the Olive Garden restaurant.
Yeah.
They earned 28 cents a share. That was a heck of a lot better than the 5 cent they were expected to do. The revenue though did miss just very slightly. And I think this was interesting that if you look at their sales for this quarter, it was about 82% of what it was the same quarter last year. And they reinstated their their dividends. So that was good news.
Cool.
So they're
then.
Yeah, so they're up almost 2.3% this morning.
Cool. Yeah, that 80%, that's almost about what I'd expect. But I figure we're about 80% open from what we used to be, and folks going out to places that they generally tend to trust the sanitation at a chain, that probably actually adds up to make some sense.
Yep, it does. And so the last one I have for you today is Rite Aid. You know, I can remember when Rite Aid would fall and their stock price was getting next to nothing.
Hmm.
But they had a good quarter. They made 25 cents a share compared to the expectation of losing a penny a share. Revenue was above forecast, and they obviously they're a pharmacy. You know that retail pharmacy has been good for them, and they're I wish I could say they're up today, but they're getting hammered like everybody else this morning, down about 0.5%. The other little tidbit I saw was that somebody started buying their stock back again. Who was it? Dollar Tree.
Ooh.
Dollar Tree had suspended their stock buyback program, and they've resumed it. They still have $800 million in that program that they can start buying back stock in their own of their own company. So some good, a little bit of good news there for Dollar Tree.
Bet they're going to buy it on the downtick we're experiencing market-wide this morning, too.
Yeah.
Resetting the table. It was a bath in red ink yesterday. 1.9% on the Dow, 3% on the Nasdaq, and 2.5% on the S&P. It was El Stinko 45 minutes before we opened this morning. Is there any crack in the army, Phillip? Can we see any turn upward?
Dave, I wish there was, but unfortunately, we are continuing on the same path we left with yesterday. We've got the Dow down about 0.7, almost 0.7%. We've got the S&P 500 down a little over 0.8%, and the Nasdaq is just really dropping. It's down almost 1.5% this morning before we get started. So the stock index is not doing well today. And then the commodities aren't helping us any either, Dave, with pressure again from the increasing value of the dollar is putting pressure, continue to put pressure on silver and gold. Silver's down another 4.3%, and gold's down another 0.6%. So not good news there. And then crude oil is, it's down a little bit from where it was, pennies from where it was yesterday, but not too bad. It's down about 0.75% right now at 39.62 a barrel.
Oh, geez. Overseas markets not looking a lot better than we are. Asia took a look at us yesterday and went, oh boy, their markets all off between 1% and 2%. European markets are off fractionally this morning. They're taking a pause, looking for direction from us, it looks like midway through their day. Phillip, it's not too late if somebody had a little more risk in their portfolio than they expected. Before you let it go down any farther, time to get an unbiased look at where the risk really is. How do I find you to find that risk?
Devin, give us a call at 863-382-0037. And I'd flip it the other way. If you have a portfolio in stocks, you need to know how much risk you have. Give us a call. Let's go through our financial x-ray. Let's x-ray that portfolio for the amount of risk and cost that's associated with it. Again, that number is 863-382-0037. Hey, catch us this weekend for the Statler Financial radio show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
And by the way, the stream is back on the air for newstalk730am.com. We got our new computer in. Phillip, thank you so much. We'll catch you tomorrow, all right?
All right, man. You have a great day, and we will catch you tomorrow.
Be well, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. Wait.
Folks, as I said, if you have a portfolio of mutual funds, stocks, bonds, anything in the market that can go up and down, you need to get a financial x-ray. Give us a call. Schedule your time, 863-382-0037. These are unprecedented times we continue to see. Give me a call. I look forward to meeting with you. Have a great day. Until tomorrow.